Welcome back to Investing Talk Podcast. Big news in biotech today, folks. Sage Therapeutics,
Oh, yeah.
a company focused on treatments for central nervous system disorders, has received an unsolicited takeover bid from Biogen, ticker symbol BIIB.
Wow.
We're talking stock surges, analyst debates, maybe even a bidding war. Ready to unpack this?
Yeah, what's fascinating is Biogen's offer.
Yeah.
They want to buy the remaining shares of Sage for $7.22 each. That's a 30% premium over Sage's closing price before this news hit.
Okay, so Biogen's making a bold move.
Yeah.
But Sage hasn't exactly had a smooth ride lately, right?
Sure. Sage's stock has plummeted
Yeah.
over 90% in recent years due to some setbacks, but they just got approval for Zurzuvae,
Right.
a drug for postpartum depression. That could be why Biogen sees this as a buying opportunity.
So Zurzuvae is the wild card here.
Yeah.
It's just starting to make some waves. What kind of market reaction are we seeing to all this?
Well, the options trading volume for Sage exploded to 51 times its average after the news broke.
Okay.
Clearly, investors are paying attention.
51 times, that's a lot of buzz.
Yeah.
Sounds like people are betting on this deal.
There's definitely optimism, but remember,
Right.
almost 12% of Sage's stock is being shorted.
Okay.
Some investors are betting against the company.
Interesting.
If things keep looking good for Sage, this could trigger a short squeeze, a sudden price surge, as those short sellers scramble to cover their positions.
Adding another layer of intrigue. So we've got investors on both sides of this potential acquisition.
Yeah.
What about the company itself? What's Sage's financial picture looking like?
Their recent earnings report showed $11 million in revenue from Zurzuvae, which is a good sign. But they need nearly $1 billion in sales to become profitable.
$1 billion?
Yeah.
Wow, that sounds like a long shot, even with Zurzuvae gaining traction.
It's ambitious, no doubt. But analysts are projecting that Sage's revenue could jump to over $500 million by 2026. That's still not profitable, but it shows strong growth potential.
Okay, so maybe not a lost cause.
Right.
But let's zoom out a bit. How does this potential acquisition fit into the bigger picture of the biotech industry?
Well, the biotech sector is actually seeing a bit of a resurgence right now, with more mergers and acquisitions on the horizon. This could be a smart move for Sage, especially if they leverage this opportunity well.
So good timing for Sage, potentially.
Yeah.
This whole story is shaping up to be a real nail-biter. But before we get into the nitty-gritty of technical indicators, we should probably take a break.
Sounds good to me. We'll be back in a moment to break down what this all means for investors watching Sage and Biogen.
All right, let's get into the technical details surrounding Sage and this potential acquisition. Where should we start?
Well, let's look at some moving averages for Sage. These can help us understand potential price trends.
Okay.
As of January 14th, 2025, their 50-day moving average is $5.68.
And for context, what's the 200-day moving average sitting at?
$9.38.
So the stock price is currently around $7.50, putting it above the 50-day but below the 200-day.
Right.
What does that tell us?
It suggests a possible short-term upward trend, but the longer-term trend is less certain. We've got mixed signals there.
Interesting. Okay. What about the Relative Strength Index, or RSI?
As of January 14th, the RSI for Sage is approximately 64.93.
And for those of us who aren't technical analysis gurus, what does that number mean in plain English?
The RSI measures price momentum to figure out if a stock is overbought or oversold.
Okay.
Generally, anything above 70 is considered overbought, and anything below 30 is oversold.
So Sage at 64.93 is getting close to overbought territory, but not quite there yet.
Precisely, it suggests there might be a bit more room for the price to climb in the short term, but we should watch for a potential pullback as it approaches that 70 mark.
Got it. So more potential gains, but with a note of caution. What other technical indicators should investors be paying attention to?
Volume is a key one. Remember that massive spike in Sage's options trading volume we talked about earlier?
Oh yeah, 51 times the average. That's a huge surge in activity.
Exactly, and that kind of volume often goes hand in hand with big price swings.
Okay.
It tells us there's a lot of interest in the stock, which could lead to more volatility.
Makes sense. And speaking of volatility, what about that short interest in Sage? You mentioned a significant portion of their stock is being shorted.
Right, about 11.9%. Now, if positive news keeps pushing the price up, those short sellers might be forced to cover their positions.
Yeah.
Potentially driving the price even higher.
Ah, the dreaded short squeeze. So that's another factor that could add fuel to the fire if things continue to go Sage's way.
Exactly. But remember, we need to look beyond just Sage.
Okay.
It's important to consider how this potential acquisition fits into the broader trends we're seeing in the biotech industry as a whole.
Good point. We touched on this earlier, but can you remind us what those trends are and why they matter in this case?
Sure. The biotech sector is currently in a consolidation phase,
Okay.
with mergers and acquisitions happening left and right.
Hmm.
This is being driven by a few key factors.
All right, break it down for us. What are those factors?
First, the cost of developing new drugs is skyrocketing.
Right.
It's become incredibly expensive to bring new treatments to market. So companies are looking for ways to share the costs and risks. Merging with or acquiring another company can help with that.
So teaming up makes financial sense in that regard.
Yeah.
What else is driving this consolidation trend?
Second, companies need scale to compete effectively in the global pharmaceutical market.
Yeah.
Getting bigger through mergers and acquisitions helps them expand their reach and tap into new markets.
So it's a strategic move to gain a competitive edge.
Yeah.
What's the third factor?
The third factor is the increasing need for specialization with all the advances in science and technology.
Right.
We're seeing a shift towards more targeted therapies and personalized medicine.
Right.
Companies might acquire others with specific expertise in these niche areas to bolster their capabilities.
So it's about staying ahead of the curve and adapting to the evolving demands of the industry.
Exactly. And all of these factors are contributing to this wave of consolidation we're seeing in biotech. Sage and Biogen are not an isolated case.
Right.
They're part of a larger trend.
So for investors, this means that understanding the bigger picture of the biotech sector is crucial when evaluating individual companies and potential deals like this one.
Absolutely. Don't just focus on the company itself,
Right.
but consider the industry landscape as well.
Right.
What are the trends? Who are the major players? What are the challenges and opportunities?
Great advice. It sounds like investing in biotech requires a lot of research and careful consideration.
Yeah.
Especially with all this merger and acquisition activity happening.
It definitely does. It's a dynamic and exciting sector with huge potential, but it also comes with its share of risks.
Now let's dive into the potential investment implications of this acquisition. What should investors be thinking about when it comes to Sage and Biogen?
Well, let's start with Sage. If the acquisition goes through,
Well,
their shareholders could see a nice profit.
you mean they could sell their shares for a higher price than what they're currently trading at?
Exactly. Biogen offered $7.22 per share.
Right.
Which is a 30% premium over Sage's closing price before the news broke?
That's a pretty attractive proposition for Sage shareholders.
Yeah.
But of course, there's no guarantee the deal will actually happen.
Right, and even if it does,
Right.
it could take a while for the acquisition to be finalized.
So patience is key for investors who are considering buying into Sage at this point. What about Biogen? What are the potential implications for their investors?
If the acquisition is successful
Okay.
and the combined company performs well,
Right.
Biogen shareholders could also benefit.
So what would be the potential upside for them?
Well, they would gain access to Sage's promising drug, Zurzuvae,
Okay.
which could significantly boost their revenue and earnings.
And they'd also be acquiring Sage's pipeline of drugs in development, which could fuel future growth.
Exactly. So there's potential for long-term value creation for Biogen shareholders if this deal works out.
But as we've discussed, there are also risks involved for Biogen.
Of course. The acquisition price might be too high.
Yeah.
The integration process could be difficult, and there's always the possibility of unexpected challenges popping up.
So as always, investors need to weigh the potential rewards against the inherent risks.
Absolutely. That's investing 101. Now let's shift gears and talk about the financial health of both companies. Where do their financials stand right now, and how might this acquisition impact their outlook?
Sounds good. Let's start with Sage. They're not profitable yet, but we know they're showing some signs of growth.
That's right. Their recent earnings report showed $11 million in revenue from Zurzuvae, which is a positive sign, but they have a long way to go to reach profitability.
And we know they need to significantly ramp up sales to cover their operating costs. Analysts estimate they need over $950 million in revenue to become profitable.
That's a steep target, but analysts are optimistic about their future revenue growth.
They're projecting Sage's revenue could reach over $500 million by 2026.
So there's potential for substantial growth,
Yeah.
but whether they can achieve profitability within that time frame remains to be seen.
Okay, now let's talk about Biogen. They're a much larger and more established company than Sage, with a solid history of profitability.
Yes, they're a leader in the neuroscience field
Right.
with a portfolio of successful drugs. They're in a strong financial position.
How might this acquisition impact their financial performance given their current strength?
Well, it's hard to say for certain.
Yeah.
The final acquisition price, the success of Zurzuvae and Sage's other drugs, and the integration costs will all play a role.
So it's a complex equation with a lot of variables at play.
Exactly. But if the acquisition is successful, it could be a significant boost to Biogen's long-term growth prospects.
Okay, so there's potential for a win-win situation here, but it's not a guaranteed outcome.
Precisely. And that brings us to another important element: the management teams of both companies.
Right. The leadership of both Sage and Biogen will be crucial in determining how this potential acquisition plays out.
Absolutely. The management team plays a pivotal role in any merger or acquisition. They're responsible for integrating the two companies and executing the strategic vision. So let's take a look at Sage's leadership first.
Okay. What can you tell us about their management team and their experience?
Sage's leadership team has a deep understanding of the neuroscience field.
Okay.
They have a track record of bringing innovative drugs to market,
Right.
even though they've faced some challenges in recent years.
They've shown resilience and commitment to their mission, which is important.
Absolutely, and their experience navigating the regulatory process and building successful commercial operations will be valuable assets in this acquisition.
Now, what about Biogen's management team? What's their background?
Biogen's leadership is highly experienced in managing large, complex organizations and driving growth in the biopharmaceutical industry. They've successfully navigated mergers and acquisitions before, which is a good sign.
Their expertise in research and development, manufacturing, and commercialization will be critical in maximizing the value of this acquisition.
Exactly. Both companies seem to have capable leadership in place, which is encouraging.
It sounds like both companies have strong management teams with the experience and skills to make this work.
That's a fair assessment. But even with experienced leadership, merging two companies always presents challenges.
What kind of challenges might these management teams face during this process?
Cultural integration is often a big hurdle.
Yeah.
Blending two companies with different work cultures, values, and ways of doing things can be tricky.
It's important for the leadership to acknowledge these differences and foster a cohesive work environment.
Absolutely. Clear and consistent communication is also crucial.
Right. They need to make sure that employees from both companies feel informed and included throughout the process.
And of course, there's the challenge of execution. Successfully integrating the two companies and achieving their strategic goals will require strong leadership and a well-defined plan.
So while both Sage and Biogen have experienced management teams, their ultimate success will depend on how effectively they navigate these challenges.
I agree. It'll be interesting to see how they handle the integration process and what kind of leadership emerges from the combined company. Now let's zoom out and consider the broader implications of this potential acquisition.
Good idea. This deal could have ripple effects throughout the neuroscience field.
Exactly. It could significantly impact the competitive landscape and the pace of innovation in the industry.
Let's start with competition. How might this deal shift the balance of power in the neuroscience field?
Well, the combined company would be a much stronger player in the market with
Right.
a larger portfolio of drugs and a bigger budget for research and development.
So could it potentially stifle competition in the long run?
It's possible, especially if other companies in the field feel pressured to merge or acquire to stay competitive.
What about innovation? Could this deal hinder or accelerate progress in developing new therapies?
That's a tough question to answer definitively. It could go either way. On one hand, a larger, more consolidated company might become less agile and innovative.
They might prioritize protecting their existing market share rather than pursuing truly groundbreaking new treatments.
Right. But on the other hand, the combined company would have a lot more resources to invest in research and development,
Yeah.
which could lead to significant breakthroughs.
They could potentially take on larger, more ambitious research projects that would have been too risky or expensive for either company to tackle alone.
Exactly. So it's a bit of a double-edged sword when it comes to innovation. It's hard to predict the long-term impact.
Now let's talk about the potential implications for patients and the healthcare system as a whole.
That's a crucial aspect to consider. If the acquisition leads to less competition and higher drug prices,
Right.
it could negatively impact patients' access to affordable treatments.
That's a valid concern.
Mm-hmm.
But on the flip side, if this leads to more innovation and the development of more effective therapies, It could ultimately benefit patients.
Right. It could also lead to improvements in healthcare delivery.
How so?
Well, if the combined company streamlines operations and reduces costs,
Okay.
it could potentially contribute to lower healthcare costs overall.
So it's a complex situation with both potential benefits and risks for patients and the healthcare system.
Exactly. It's important to consider all these factors as we assess the broader implications of this potential acquisition.
All right, we've covered a lot of ground today.
Yeah.
We've discussed the background of the deal, the financial performance of both companies, the management teams, the competitive landscape, and the potential implications for patients and the healthcare system.
It's been a thorough analysis of this potential acquisition.
Now let's wrap up this segment of the podcast with some key takeaways for our listeners.
Sounds good. What are the most important points to highlight?
Well, first and foremost, there's still uncertainty surrounding this acquisition. It's not a done deal, so investors need to proceed with caution.
Right. Don't assume that the acquisition is a guaranteed success.
Second, even if the acquisition goes through the integration process, will take time. It'll be a while before we see the full impact of this deal.
Patience is crucial in this situation.
Third, this acquisition is part of a larger trend of consolidation in the biotech industry. So understanding the broader context is essential.
We're seeing more and more mergers and acquisitions as companies adapt to the evolving landscape of the industry.
And finally, this potential deal has far-reaching implications that could impact competition, innovation, drug prices, and patient access to care.
It's a complex situation with many moving parts.
Yep.
And it will be fascinating to see how it all unfolds in the coming months and years.
All right, we've covered a lot of ground today, but there's still more to discuss.
Yes, we still need to share our final thoughts and predictions about this potential acquisition.
Stay tuned for the final segment of Investing Talk Podcast, where we'll do just that. Welcome back to Investing Talk Podcast. We've spent the last two segments dissecting the potential acquisition of Sage Therapeutics by Biogen.
Yeah, we've looked at the market reactions, the financial picture, the players involved, even how this deal fits into the bigger trends in biotech.
Now it's time to put all the pieces together and answer the big question on everyone's mind. Do you think this acquisition will actually happen?
Based on all the information we've examined, I believe the odds are in favor of the acquisition being finalized. Biogen clearly sees value in Sage, particularly in the potential of Zurzuvae to make a significant impact on the market.
I'm inclined to agree Sage's board might try to negotiate a higher price. But ultimately, I think they recognize the benefits of joining forces with a company like Biogen.
Yeah, I wouldn't be surprised to see Biogen sweeten the deal slightly to seal the agreement. But ultimately, I believe both parties are motivated to make this acquisition a reality.
Okay, let's assume the deal goes through as we've discussed. What are some key developments investors should keep an eye on in the coming months?
The integration process will be crucial to watch. Merging the operations cultures and research programs of two separate companies is a complex undertaking. Any signs of friction or difficulty during this phase could signal trouble ahead.
That's a great point. A clash of cultures could derail even the most promising merger. What else should investors be paying attention to?
Zurzuvae's sales performance will be a key indicator. If sales continue to grow at a healthy pace, it will reinforce Biogen's confidence in the acquisition.
Makes sense. Strong sales figures for Zurzuvae will demonstrate its market potential and validate Biogen's decision to acquire Sage.
Precisely. And let's not forget about Sage's pipeline of drugs in development. Biogen is likely counting on those drugs to contribute to the long-term value of the acquisition.
So any positive news from clinical trials, any advancements in those development programs will be very encouraging signs. Investors should definitely keep tabs on those developments.
Absolutely. This acquisition has the potential to reshape the entire landscape of the neuroscience field. It'll be fascinating to observe how things unfold.
Well said. And on that note, I think we've reached the end of our look into the potential Sage and Biogen acquisition. It's been a fascinating journey, hasn't it?
It certainly has. We've uncovered a wealth of information and gained valuable insights into the intricacies of this deal and its potential impact on the market.
I always appreciate your expertise and the clarity you bring to these complex topics.
My pleasure. I always enjoy discussing these market-moving events.
Now to our listeners, we want to hear from you. What are your thoughts on this potential acquisition? Do you think it will ultimately be approved? Share your predictions and insights in the comments. And hey, while you're at it, hit subscribe and share this episode with your fellow investing enthusiasts. We'll be back next week with another insightful discussion on Investing Talk Podcast.